this has been a interesting story because we had that little uptick here in the beginning of the year in the bond market, right? And we had Nicole on a call that was talking, it's almost one of our biggest challenges is the news. Everybody's like, hey, we're in a rate cutting cycle and it's moving downwards. And then they come in and do the consultation with her. And of course, now they're looking for a fixed rate and not a variable rate. And she has to tell them, well, hey, actually this week, your fixed rates are actually up a little bit. That was at the beginning of January, and now we're seeing quite the opposite. We're seeing the bond market respond at a lower number, and even looking at Wawa, I made a post yesterday, some of those rates are down 10, 20, and even 25 basis points in terms of the fixed rates that they're offering.
Yeah, I mean, if we look at going back to 2022, we've spiked up, but we've kind of bounced around in a certain range here. And the news with Donald Trump and the tariffs the other day finally brought the bond market out of that range, started to look like we were heading down further. We got an agreement. It came back up a little bit, but not back to where we kind of saw it before in the 2.8, 2.9 range. We're down in the 2.6. This is good for fixed rates. This will bring the fixed rates down because when the government cuts when the Bank of Canada cuts the interest rates, that primarily affects the variable rate mortgages that you're going to get on lines of credit or a variable rate mortgage on your house. So when those variable rates were coming down, fixed was still the same. So really, it wasn't giving people this massive option to get a cheaper mortgage because fixed were solid at a lower price. And variable rate was just coming down to where fixed was. But now fixed is starting to come down because we're seeing the bond market soften. So that's a great sign for people that are a little bit worried about sitting in variable again. They just sat through variable and how volatile it was for them. Yep. A lot of conversations I'm having are like, I'd rather a fixed, whether it's a 2, 3, 4, or 5 year fixed. They don't want to go through the volatility of what they had the last couple of years. So definitely seeing the bond yields drop are great news for the fixed rate market.
Yeah, absolutely. I was just checking on a post there from Ron Butler saying that he's finding many fixed rates now below the 4% range, which he wasn't seeing earlier in the month. So great for those people looking for fixed rates. And like you said, a lot of people want the stability. I want to know what my mortgage payment is going to be for the next 5 years. I've got a 5-year plan. I know what I can carry. I'm comfortable with that. But when I'm in the variable to kind of bet against the market, and historically it's worked out well, you're paying less than what you would on that 5-year. But then you've got people that are up there at, $1,000 extra a month, $2,000 extra a month because of what their leverage is and how quickly those increases went up in the variable side. You could be scarred by that. I don't ever want to go through that again.